Today on Perth Property Hub, I'll be speaking with Michelle Maynard, partner at Carbon Group. Michelle is a tax and accounting professional who specialises in giving advice to small and medium-sized businesses and property investors. Today, Michelle is going to give you her top end of financial year tax tips. Hi Michelle, let's talk end of financial year preparation.
Exciting, let's do it.
So what are some of the things that your clients and my clients need to be considering in terms of the prep leading up to end of financial year, particularly if it might be their first year they've had an investment property?
Sure, so I think the key thing is 30 June is a line in the sand, finish line type of situation. So you need to do whatever it is that you want to do to help your tax position before 30 June. So anything after that gets pushed into the next financial year. So go back if you haven't had a really good record keeping system year to date and put together your records. So any expenses or that you've paid out of your own pocket, you need to have a record of those so we can claim a tax deduction for it. Now's also a really fantastic time to do some tax planning. So have a look at your investments, and if they are, say, positively geared, so they're making you an income, now is the time we can make some decisions to try and tip that in your favour. So I know with finance, Kerry, you can get interest in advance loans. So that might be something that you want to do. If you prepay your interest for the next financial year, this side of 30 June, you get to claim that tax deduction this year, which might actually work in getting you a tax refund. Another key thing I tell my clients is if you haven't got a depreciation report on your investment property, get one now. They can actually backdate them, which is fantastic, but you don't want to be scrambling for that come tax time, so make sure you've got a depreciation report. And last one, if you have sold an investment property in this financial year, the tax is calculated on the contract date, not the settlement date. So if you have something that you've signed a contract but is not settling to next year, we're going to have to include that capital gain this year. So make sure you've got all your documentation together for that.
And that's something that happens not all the time, but I do occasionally get clients come to me and go, oh, I've sold that investment property, but I don't have to worry about it this financial year because it doesn't settle until the 20th of July. And then I'll say to them, and what date was your contract signed?
Yes, that's a big one that people don't realise. So it is absolutely on contract date, not settlement date. So yeah, if you've already signed that contract, unfortunately it's being included in this year's tax return.
And with the interest in advance, I know often I have clients that are looking at buying sort of investment properties towards the end of financial year. And obviously that's still a conversation they need to have with their accountant because it may or may not be particularly beneficial to them to prepay the interest. But if someone's on a relatively high income and paying a substantial amount of tax, that's certainly something that is going to be beneficial for them if they can claim that forward year's tax against this year's income.
Absolutely. So prepayment of any expense, and that could be rates as well, it could be property management fees. As an individual, you get to claim the deduction when you pay it. So prepaying expenses, especially if you're on high income, should make sense, but again, definitely check that with your accountant before you do it. But yeah, 30 June is when you have to make all these decisions. So definitely start looking at these things now so you can make those decisions and those actions because it has to be done before 30 June.
Excellent. Great tips there. Thanks so much, Michelle.
My pleasure.